Good afternoon, welcome back to Kalkine TV. This is Sage and you are watching the last show of the day, the last trade show. And let's get started with today's market close commentary. The Australian share market closed higher on Wednesday, snapping previous session losses led by gains in tech, healthcare, telecom and consumer staple stocks. The market witnessed broad-based buying with all indices barring energy and utilities ending in the green. The S&P ASX 200 added 65.10 points or 0.90% to close at 7,326.9. And early today the index opened marginally lower following weak cues from the US markets, while the stimulus tampering by the Reserve Bank also dented the investors' sentiment. However, the market staged strong recoveries and rebounded as much as 0.9% to hit an intraday high of 7,327. The persistent concerns around the COVID-19 cases in the country's most populous state of New South Wales capped the market gains. However, in a bid to control the rising cases, the New South Wales government has decided to extend the lockdown in Greater Sydney after the state recorded 27 new cases in a new development. The curbs have been extended until 12:01 a.m. on July 17th, and social distancing restrictions in regional areas have also been extended accordingly. Moving on now to the sectoral space, 9 of 11 sectors ended in positive terrain. The information technology sector was the best performer with a 2.85% gain, tracking overnight gains in its US counterpart, the Nasdaq. And index heavyweights Nuix, Afterpay, Zipco and Nearmap ended higher. Among others, healthcare, telecom, consumer staples and consumer discretionary also among the top gainers, rising over 1% each. Bucking the trend, however, energy sector emerged as the top laggard with a 1.67% loss, snapping 3 sessions gaining streaks owing to falls in crude oil prices. The index heavyweights Woodside Petroleum, Santos Oil Search, Origin Energy and Beach Energy ended in the red. And moving on now, let us look at the stocks that are creating the buzz today. Firstly, the shares of the mining software company K2 Fly rose as much as 1.5% to 32.5 cents Australian after the company reported record sales invoicing as well as robust annual recurring revenue growth in the June quarter. For the fourth quarter ended June 30th, 2021, the ASX listed technology company raised invoices of 2.54 million Australian dollars as against 1.90 million Australian dollars in the previous corresponding period in financial year 20, registering a year-on-year growth of 34%. The invoices for the financial year 21 increased by 18%, reaching 7.8 million Australian dollars from 6.6 million Australian dollars in the last fiscal. And moving on now to the next company, the share price of Kalamazoo Resources gained as much as 12.2% to hit a 4-month high of 41.5 cents on identifying lithium potentials at Western Australian's project. And the Gold and Copper Explorer said it has identified lithium potential at the company's Doms Hill project in East Pilbara, Western Australia. The company stated it has initiated a focused exploration program and further field exploration to fast-track to a drill-ready status. Taking a look at the next company, shares of phosphate maker Fertos dropped as much as 22% to 19.5 cents after discounted share placement. The company said it received bids to raise 5 million Australian dollars via a placement of 33.3 million shares, priced at 15 cents per share. The placement price is at a 40% discount to the company's last close price of 25 cents. Exploring the next share. Buy now, pay later firm Payright rose as much as 7.4% to 58 cents on a partnership with Mint Payments. The company teamed up with Mint Payments, a fintech firm, to integrate Payright's BNPL solutions into its online payments processing system. And under the agreement, Mint Payments merchants will have the access to Payright's BNPL solution for e-commerce and in-store transactions. And now it's time for a short break, but please stay tuned as I'll be back with more trending updates after this.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
sectoral coverage or industry news,
we cover it all on our news segments.
Be on top of the latest news
with Kalkine TV.
Welcome back, Sage here, your host live from Kalkine Studio, and you're watching The Last Trade. Let us now explore some more ASX listed companies that were trending today. Beginning with nickel miner, Western areas gained as much as 4.1% to $2.55 Australian on robust June quarter output. The company stated in June quarter it mined about 4,911 tonnes of nickel, compared with 4,236 tonnes in March quarter. And taking a look at the next company, the share price of metals and electronics recycler Sims gained as much as 2.5% to $16.23 Australian on getting a nod for pilot resource renewals facilities in Queensland. The company stated that the Brisbane City Council and the Queensland Government has granted planning development approvals for its pilot resource renewal facility at Rocklea. And the next big company making the news is Australia's biggest airport operator, Sydney Airport Holdings, gained as much as 3.15% to $7.85 Australian. Bloomberg News reported on Thursday that a consortium led by Macquarie Group is considering a rival bid for Sydney Airport. And earlier this week, the Sydney Airport had received a $22.26 billion Australian dollar buyout offer at $8.25 Australian per share from the Sydney Aviation Alliance. A consortium consists of IFM investors, Q Super and Global Infrastructure Partners. Let's move on to the next company. Shares of Zipco surged as much as 15% in the early trade on reports that Swedish buy now pay later giant Klarna may have acquired a small stake in the company, and Klarna and Afterpay are vying for supremacy in the global BNPL industry, with Zip, Affirm and others adding to the intense competition. Taking a look at the next ASX listed share, the share price of gold miner Kalkine Resources rose over 2%, reaching $1.23 Australian after the Australian multi-commodity mining and exploration company surpassed Tomingley production guidance. The company announced that its Tomingley gold operations in Central West New South Wales had exceeded its production guidance of 50,000 ounces to 55,000 ounces for the financial year 2021. The company had upgraded the guidance in April from the original full-year guidance. And next up, investment management firm AMP fell 0.3% to $1.12 Australian, pairing the opening gains. The company has entered into a pact with Macquarie Asset Management to sell AMP Capital's global equities and fixed income business for up to 185 million Australian dollars. And meanwhile, Macquarie Group stock gained as much as 0.8% at $157.90 Australian. And taking a glance at the next share, shares of Tesserant Limited climbed nearly 6% to 28 cents after the tech firm acquired a stake in Deltree Pty Limited, a leading sovereign biometric company. The company will initially invest 600,000 Australian dollars for an initial stake, with a follow-on investment of a further 1.1 million Australian dollars upon successfully meeting key growth targets. And moving on now to the next share, Netwealth shares rose nearly 2% to $16.80 Australian after the investment management firm provided business updates for the June quarter. The company saw its funds under administration surging to 47.1 billion Australian dollars in the June quarter, while the net inflows rose to 3.1 billion Australian dollars. Exploring the next share making the news today, shares of Worley climbed 1.5% at $11.42 Australian on securing a new contract. Red Sea National Refining and Petrochemicals Company has awarded Worley a services contract for its Greenfield Integrated Refinery and Petrochemicals Complex in Egypt. And lastly, in our list today, the share price of Boral fell 0.2% to $7.39 Australian after diversified Australian investor Seven Group splashed around 440 million Australian dollars to raise its stake in building materials company Boral north to 40%. And now it's time for another short break, but please stay tuned as I'll be back with more trending updates on the markets in the Asian region.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With Kalkine TV.
Welcome back, Sage here, your host, live from the Kalkine studios, and you're watching The Last Trade Show. Let us now explore the Asian market performance. The Asian stocks were trading lower on Thursday as concerns about the coronavirus situation in parts of the region dented investor sentiments, and Hong Kong's Hang Seng was the worst performer in the region, nose-diving 2%. Japan's Nikkei fell 0.6% amid the report that the government plans to officially declare a full state of emergency in Tokyo from July 12th until August 22, covering the entire period of the Olympic Games to curb a new wave of coronavirus infections. In a similar trend, Singapore's Straits Times dropped 0.5%, Seoul's Kospi fell 0.8%, and Thailand's SET Composite plunged 1.4%. Taiwan's weighted index traded flat with marginal gains, and meanwhile China's Shanghai Composite fell 0.6%, pairing the opening gains. On Wednesday, the global equity markets rose as investors digested the minutes of the latest US Federal Reserve meeting, and the correction in the interest rate on bonds also supported the global equities. In the overnight trade, the Wall Street ended higher after minutes from the Fed meeting revealed that officials were divided on economic signals. The Dow Jones gained 0.3% and S&P 500 surged 0.34%. The tech-heavy Nasdaq Composite registered a gain of 0.17%. Thanks for joining us on that report and for our reports through the day. That is all for now, and stay tuned with Kalkine TV for more live market updates. We'll be back with more news on the markets, economies and diverse themes and sectors as close as possible to 10 a.m. tomorrow morning. See you then. Sage signing off.